GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is James Corbett, publisher of the CorbettReport.com and editorial writer for the International Forecaster. Welcome back to the show, James.
Thanks for having me back. Always a pleasure to be here.
The Bank of Japan had their big meeting last week, the same time the U.S. Fed did. The Fed did nothing. What did the Bank of Japan do?
Essentially nothing. Certainly nothing that would set the markets on fire or really upset expectations. They did not take negative interest rates any further negative, although that wasn't expected. The only thing of substance that they did is commit to a steepening of the yield curve, so basically committing to trying to keep the 10-year bond rate at 0%. But it's essentially an Operation Twist-like maneuver of just changing the maturities of the bonds that they're buying in an attempt to steepen the yield curve. And they have committed to maintaining their inflation target of 2%. In fact, they say they want to overshoot that 2% target that they've been aiming at for really the last 3 years since they started their quantitative and qualitative easing programs. But the interesting thing about that is that the Wall Street Journal had an interesting op-ed just a few days ago where they talked about the fact that the BOJ has essentially admitted that they are not credible when it comes to their 2% inflation target. They point to some of the language that the BOJ has been coming out with in the wake of that meeting, where they said the bank has attempted to make expectations formation more forward-looking by pursuing quantitative and qualitative easing with the aim of anchoring inflation expectations at the price stability target of 2%. However, in the course of this attempt, the observed inflation rate declined due to a variety of factors, such as the substantial fall in crude oil prices and inflation expectations, reflecting their adaptive manner, followed suit. So in effect, they're saying, yeah, we've completely failed so far, but trust us, we'll get there eventually, which is a pretty lofty goal, considering they are not just battling a few years of bad market expectations. They're battling a couple of decades now of deflation. So apparently the next step is going to be next year. They are committing to expanding the monetary base by another 20%. So printing money equivalent to 20% of the size of the Japanese economy, which is equivalent to the Federal Reserve's all three versions of QE 1, 2, and 3 all together. Apparently Japan is going to release that on the markets next year and see if that has any effect on inflation. But I think it seems extremely unlikely that they're going to reach their 2%. And it seems even unlikely that even the Bank of Japan believes they're going to get to a 2% rate. I think they're just talking up that 2% target to try to get it above the 0% where it's been hovering for so long.
Well, what do they plan to do with 20% more money? I mean, how does it get distributed? Do they hand it out to folks? Yeah.
Well, essentially what they are doing is not only bond purchases, but ETF purchases. They are, every central bank manipulates and dabbles in the markets, but generally they do it behind the scenes and in the back door and not officially. The Bank of Japan outright officially buys ETFs, so they are outright invested in shares. And by the end of next year, if they continue their ETF purchases as they're going right now, they are expected to be the number one shareholder in at least 55 Japanese companies. That's pretty amazing. The Bank of Japan is essentially nationalizing the Japanese economy, and it's happening with really no break on this. Of course, they say they're aiming at this 2% inflation target, but given that that's extremely unlikely that they're going to be able to reach it, essentially they're committing to nationalizing the Japanese economy, and it's very difficult to see what's going to throw a break on that.
Is Japan about to become a democratic people's republic then?
It's a question to what extent that the Japanese economy has ever not relied on central bank expectations. In fact, of course, that was a key part of the blowing of the bubble in the 80s was central banks mandating banks to lend out a certain amount of money, which created the bubble in the first place that led to the property bubble and the Nikkei bubble, which ultimately popped, and we've been dealing with that for a couple of decades now of slow deflation. That, again, was central bank dictated. So now, perhaps it's no particular huge change of course, but outright ownership of various companies by the Bank of Japan is at least a new inflection on that. So it is pretty crazy, and I don't think anyone has a good escape plan from this. I think the only thing that central banks and central planning engineers generally hope is that if we blow this bubble up and keep the economy functioning, then hopefully there will be some new technology, some new company, some new idea, some new innovation that will come along and basically grow the economy up to fit the bubble so that we don't have to pop it. But I can't think of any times in history where that's really worked successfully. Ultimately, it's a bubble. It's going to pop at some point, and the more they blow it up, the more messy that's going to be once it does blow up.
Is the Bank of Japan going to appoint members to the board of directors for those companies or chair those companies?
Well, I don't think that it's going to reach that level. It's, again, done indirectly through ETF purchases, but still the Bank of Japan is holding those ETFs. So they're not going to be running these companies, but they certainly are going to be the majority shareholder of a number of them. So it's pretty insane. And I'm not sure exactly how the Japanese economy is going to extricate itself from this dependence on the central bank that's been baked into the cake. And it's gotten to the point where, as a lot of people are pointing out, the central banks generally, the BOJ and the ECB, are running out of road when it comes to their ability to maintain these bond purchases and to ultimately wean the markets off of them. Because the more they purchase, the more the markets depend on that. Therefore, they have to buy more in order to exceed market expectations, in order to achieve the same types of stimulus results that they were getting before. And it becomes exactly like a heroin junkie. It requires more and more and more instead of gradually weaning off, which is what the central banks would supposedly like to do.
Well, you've had negative interest rates now for quite some time. What's been the reaction of the average person?
The average person, again, this doesn't necessarily affect what's going on in their bank accounts directly. This is more to do with bank reserves. So I'm not sure the average person feels it in that direct sense, but it is part of the overall sense that the Japanese economy is in dire straits. And I don't think anyone is under any illusions that things are that there's really any path forward from here. The Abe government was voted into power, well, a couple of elections now, basically on the back of Abe's three arrows and the Abenomics and all of this. That is clearly a failed policy at this point. As has been pointed out, the stock market and inflation expectations and all of this is basically back where it was when all of this quantitative and qualitative easing madness began. So, and unfortunately, real wages here continue to stagnate. So I don't think anyone is particularly enthused about what's happening in the economy now, but it is a question of, well, what's the alternative? And that was ultimately what the last round of elections here became about. No one is particularly enthused about Abe as a prime minister, but there's really no alternative here in the opposition parties, which are pretty anemic at this point.
I was just going to ask about that. Why does he keep getting reelected if he's not doing a great job? No one else to take his place.
Well, in Japan, there is essentially a ruling party that has been in power ruling for almost the entirety of the post-war era, which really does make you question about the democracy here. I think that speaks to a couple of things, one of which is just the conservativeness of the Japanese public, who would prefer, especially in times when things are treacherous or when there may be economic instability, you want to go with what you know, so you vote for the ruling party, basically. There was a period of a few years back, 2009-ish, 2010, 2011, where the opposition, the main opposition party, the DPJ, was actually in power, which was a remarkable change of events. It was something like a Japanese version of Obama hope and change, except for it was even less effective. And the DPJ basically fell apart on the back of a number of scandals and was voted out in favor of Abe and the traditional ruling party, the LDP. And that's been where things have stood now for years, and there's no sign that the DPJ is going to be able to make a comeback. So it really isn't, I think, a wave of popular enthusiasm for Abe. There are certain sectors of strong nationalist sentiment in which Abe has his base. But the general public, I think, just doesn't see much of an option in terms of voting for anyone else.
We'll have more with James Corbett right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with James Corbett. James, everybody in the world, it seems, has been talking about Vancouver's real estate bubble, but China has a huge real estate bubble to worry about as well, doesn't it?
It certainly does. And if you want to actually see what a bubble market looks like, there is a viral video on YouTube right now. It's entitled Chinese Housing Market Frenzy, Shocking Scene at the Opening of a New Real Estate in Hangzhou. And basically the idea here is this was a new offering for a Chinese property real estate development that's opening in Hangzhou in China. On September 24th, they had the grand opening. They were starting to sell this property, and you can see that they open the doors and people start flooding in, rushing, pushing each other aside to try to get to be one of the first to buy a part of this new property. And they ultimately end up actually breaking down the doors, and someone gets trapped under them because there's so many people rushing through. That's a pretty good sign there's something going very wrong. But for more of a nuts and bolts perspective of it, you have as Zero Hedge is reporting, Wang Zhanling, who is ostensibly the richest man in China, a $30 billion fortune or so in shopping mall development and office complexes. I would take that with as much of a grain of salt as I do the Fortune 500 list, or the richest people in the world kind of thing. But still, a very, very rich Chinese property developer who is saying this is not just a bubble. He is calling it the biggest bubble in history. And what's essentially happening is that the Chinese countryside and the smaller towns are being vacated, and you have a collapse of property markets there. And then you have the bubble that's forming in a lot of major urban centers, as not on the back of any particular economic productive activity, but on the back of rising credit. Basically, people are getting more and more indebted, and the government is accommodating that through the central bank because they have tried over the past few years to try to at least close that spigot of easy credit a few times. Every time they even attempt to do so, there's major problems, including cash seizing up of cash markets, so that there's very limited access to cash whenever they even try to ease up on the credit even a little bit. So they're in a position where they have to continue providing this credit to the markets to avoid a complete collapse, but all of that credit is just being used to speculate in property in the major urban centers. And they've tried capital controls, they've tried limiting people's property purchases. Nothing so far has worked, and it doesn't look like anything is going to really stem this until the property bubble pops. But again, as Wang Zhanling was pointing out, this is, if not the biggest bubble in history, at least a very, very large bubble, and certainly not one that's sustainable by any productive activity in the Chinese economy.
Any of those people trying to move into those empty cities?
Not in the numbers that would be required to actually turn them into non-empty cities. Again, that has been part of the credit situation. Part of that credit is being used in infrastructure projects like building these massive cities and massive apartment complexes and things out in places where no one is actually trying to live. Meanwhile, everyone is trying to get into the major property markets, Shanghai and other major urban centers. So it's an example, a perfect example of central planning, central engineering of the economy gone completely wrong as they continue building these massive cities for no one out in the middle of nowhere, whereas everyone else is trying to get into the major urban centers.
So they should have been building in the major centers then.
Well, they should at least be attempting to structure this in a way that corresponds in some way to what's actually happening in the markets. More people are moving out of the countryside and into the major urban centers. This should have been foreseen, given that this is actually, in fact, something the Chinese government has been attempting to promote. What's being called the largest migration in human history is taking place as the Chinese countryside empties and more people pour into the big cities. This is something that's been foreseen. And the Chinese government, I guess, thought that they could keep a lid on this somehow by restricting property purchases and the like. But obviously, where there's a will, there's a way. And there's just nothing that seems to be able to stem this tide of people scrambling, literally crawling over each other to try to get a piece of this action.
Is there any thought that the government is going to start hauling people out of the big cities and out to these artificial ones?
One can imagine at a certain point that might actually become... I don't want to say necessary, but necessary in the eyes of the Chinese government, perhaps, if they want to try to maintain some sort of control over the situation. And certainly, if there's any country, any government on the planet that would be willing to attempt something like that, it would be the Chinese government. We haven't really seen any particular moves towards that yet, but one imagines that these giant cities that are out in the middle of nowhere that no one's living in, at some point, the Chinese government is going to be trying one way or another, whether by carrot or stick, to get people to actually look into those types of areas rather than the big cities.
Yes, you've just won our reverse lottery, and you get to move to one of these cities.
It might be that they have lotteries for everything there, including whether you can buy a car or whether you can drive the car that you purchased in Beijing. For example, they have different types of lottery systems and things for the privilege of being able to drive. So wouldn't surprise me that they have some sort of reverse lottery for, whether or not you have to move to the boonies.
Also, I mean, they were just talking about the natural gas pipeline for northern BC getting tentative approval. But of course, people like China have to want to buy that natural gas. And they said that natural gas, if it's sold, will be the equivalent of 1 million new cars on the road. But China sells 50,000 new cars a day. That's 1.5 million new cars a month. They're already doing that with cars. Why not do it with natural gas?
Indeed, there's certainly the market for that. And as we've seen in recent years, there's clearly what's happening in China is almost unthinkable in terms of the growing of the market that was previously 1 billion or so, mostly peasants, is becoming 1 billion or so, rising at least lower middle class or something along those lines. So there is a market to sustain that, and obviously China is very interested in securing its various energy requirements around the world, but that would definitely include Canadian natural gas. And
that's much better to burn than coal.
Well, yes. I mean, from a number of different perspectives, yes.
Now, the World Trade Organization predicts that global trade has declined or will decline 39% this year. What kind of a threat does that pose to all of us?
Well, to be clear, they are cutting their expectation in global trade growth. So originally, back in April, they had said that they were predicting a 2.8% growth rate for global trade this year. They've cut that back, that 2.8% estimate, they've cut that back down 39% to 1.7%. So they are expecting 2016 global trade growth to be 1.7%. But that is still very significant because, of course, global trade and global GDP go hand in hand. There has never been a situation in which we've had an expanding global economy with such an anemic global trade growth. So it is very important, but this is certainly not surprising to anyone who's been following any of the key indicators for at least a year. We've had imports collapsing at U.S. ports and other stories like that, that we've been able to see this slowdown in global trade. Now, the interesting part of this, though, I think, is embedded in the WTO's announcement of this scaling back of global trade growth estimate, where the Director General of the WTO, Roberto Azevedo, he said, the dramatic slowing of trade growth is serious and should serve as a wake-up call. It is particularly concerning in the context of growing anti-globalization sentiment. We need to make sure that this does not translate into misguided policies that could make the situation much worse, not only from the perspective of trade, but also for job creation and economic growth and development, which are so closely linked to an open trading system. So I think that's a not so subtle shot at the various populist movements that are arising around Brexit and around the Trump campaign and other political phenomenon that are looking to roll back some of this globalization and free trade and deals like the TPP that have been the standard, the status quo for global trade for several years now, if not a couple of decades. We're starting to see some political pressure on that, and so I think this is one way of WTO saying, look, if you guys keep threatening to undermine these trade deals, there's going to be bad news for the global economy. And I think this is yet another example of, I think this is an organic economic phenomenon that's taking place, but they're going to attempt to blame it on people, these silly backwards people who don't like these giant free trade deals that are being worked on behind closed doors.
And of course, it's hard to convince people in cities like Chicago and Detroit, where they have thousands of abandoned factories, that perhaps favoring U.S. trade only is not a bad idea.
Exactly right. There is obviously political sentiment and political will behind this movement right now, and I think this is perhaps an attempt to put a cork on the bottle or put the toothpaste back in the tube. I'm not sure it's going to. Well, let's put it this way. I don't think that the people who are particularly upset about globalization and these free trade deals are going to be listening to what the Director General of the WTO is saying anyway. But certainly people in organizations that do have power and influence on the global scene, like the WTO and other similar organizations, are really doing their level best to try to mitigate the effects of these populist movements. So it's going to be very interesting, certainly in the coming years, as I think these populist movements start to translate into more power in terms of political governments being elected into power in the U.S., potentially in the U.K. and other places, and seeing how that either accommodates or butts heads with the WTO and similar organizations.
Well, I wonder too, we have this whole eat local, produce, don't import stuff. Is that part of the whole sentiment where people say, why should I have to import it from China? Why don't we build it here?
It should be, and I think certain sectors of the anti-globalization movement would see that as being part and parcel of the movement as a whole. I think that the populist political sentiment is not centered around that so much. I don't think that that's the overwhelming concern for people. I think it is more about manufacturing jobs, and the idea is that basically this is offshoring jobs. But I think people who are committed to anti-globalization in a philosophical and an ideological sense see the connection there between not just manufacturing, but everything, including, of course, the global food supply, which is increasingly factory farmed and increasingly from goods being shipped halfway around the world, because it's somehow cheaper to do that than to grow them in your own backyard. But I think people who are committed to a thoroughgoing rejection of this globalized system would recognize that eating local is not just good for organic farming and healthier crops, but also for the health of the internal ecosystem of a country that can't feed itself or clothe itself or manufacture its own products is a country that is, well, at the whim and mercy of the global economy. And I think people have to understand that if they are truly committed to anti-globalization.
James, thank you so much for chatting with us.
Thank you for having me.
My guest has been James Corbett, publisher of thecorbettreport.com. He was speaking to us from Japan, where he has lived and worked since 2004. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.